Hi everybody, it's Russell here. Have a look. The market is back into a confirmed up. This is our shortest ever confirmed down in the history of market timing that we track for Australia. So the market is in no mood to slow down just yet. VectorVest advocated here for us to be careful. So if you're using the confirmed signals as your market timing, we do not advocate buying any stocks in a confirmed down. Rather, you wait for the confirmed up. As it turned out, it was short-lived, and away you go again. Don't try second-guess the market. Let VectorVest guide you. There was good reason as to why we got it confirmed down. The MTI had gone below 1. All right. It could have continued to go down. As it turned out, it didn't. Fortunately, the market's coming back up again. The blue skies are coming out again. All right. The clouds have passed for now. Keep your eyes peeled on the market timing. If you go into another confirmed down and you're using the confirmed signals, then you do not want to buy any further stocks, and you want to make sure that if you stopped out, you wait until you get the confirmed up signal to go back in. Now, of course, no doubt you've tied that back into your trading plans. So if you're new to VectorVest, we have this wonderful tool called Backtester that you can trial out. You can take out a 2-week trial to trial out, to turn on all the functionality to see if it's what you want to use. Believe you me, once you get into it, you'll never look back. Backtester allows you to optimize, perfect, and test your very own trading plans so you can then commit real money to them when you are comfortable with how the performance is tracking along. Okay, with that said, today I want to go and share with you a great trading plan. So we've got a couple of trading plans in the VectorVest system for education purposes, which you can consider if you choose. All right, and to find those great trading plans, click on Viewers, and then on here, click on Trading System Viewer. Now, what I've done is I've sorted the returns year to date. All right, so on here, I've just clicked on the year to date column over there, and you'll see the triangle pointing down, and it sorts all of these trading plans in descending order. All right, year to date. So you can see over here, the SMSF balanced. And this one here is really doing well this year so far, up a whopping 18%. That's pretty spectacular considering. Now you'll see if you run your eye down the 1-year column here, you can see our best one over the last year has been the income portfolio, followed by the all div payers, followed by retirement growth, followed by SMSF balanced. So this is the one we're looking at today. This comes in at 4th place over the last 12 months. But if I look at it over the last 3 months, it's one of our top performers. If I scroll over here, click back on year to date, there it is. Okay, you can see it's our best performer over the last 3 months. And look at that, over the last 12 months, up a whopping 12%. So what you can do once you identify a given portfolio, this is a 5-share portfolio. How do I know? The way you can go and find out all that information is you can click on Trading System Details. Okay, so if I click on Trading System Details, it will load up a web page for me. There it is, and I can then read up about it. SMSF balanced portfolio seeks the perfect balance between growth and income. Only stocks with a dividend yield of 2% or better make it into the portfolio. Furthermore, the portfolio ensures only stocks with the best combinations of fundamentals and technicals make it to the holdings. Stocks are given room to move with the trailing stop loss in place to ensure you're not doing a lot of trades a year. This portfolio continues to prove itself year in and year out and has been one of the top performers over the years. The SMSF balanced portfolio has averaged less than 10 trades a year since 2012. And then what you can do here is you can click on the trading system rules. So you've all got access to this. And you can see, right, it uses the GLBRT kicker. So it's not super aggressive and it's not super conservative. It's middle of the road. All right, so it's a nice timing signal system there. It's widely used in Australia and around the world. It's a good middle of the road timing signal. Now if I click on the full mode, so it's going to be using this search here, Southern Comfort SC Div. And there it is. You can see all the parameters behind it. So what's interesting here is, there it is. It uses a screening criteria, so it will only find stocks between $1 and $5. Now, typically in Australia, stocks between the $1 to $5 mark are what we call mid-cap stocks. So they're in the top 100 ASX stocks, but they're not in the top 50. That's how the Commonwealth Bank defines mid-cap. So you'll find a lot of those stocks fall into that mid-cap type category, or at least within the ASX 200. Okay, you can see over here, look, it's making sure that the yield is at least 2% or better. All right, ensuring good average volume a day, a wide-ranging trailing stop loss. So you might be saying to yourself, well, why was it using a 20% trailing stop loss? Why not a 12 or a 15 or a 13 or whatever it might be? This is the power of backtesting. Backtesting established that a 20% trailing stop loss on these parameter sets work best. Look at the sort. So once it finds these stocks, it then sorts them by RT times VST times CI divided by price. So you're getting the best combinations of technicals, fundamentals and technicals. So RT being technicals, VST being fundamentals and technicals, times CI, our comfort index, looking for those smooth left to right price patterns taking place, all divided through by price. So the best combinations of fundamentals and technicals on a dollar by dollar basis, which then meet all of this criteria with appropriate risk and money management rules. Try and maintain 5 positions. So it's a 5-share portfolio. Okay, it'll never own more than 10% of a stock's average volume. So they're all the settings. Now, if I close out of here, let's click on trading system details again just to fire that up. Here we go. All right, and if I scroll down here, you get all the other metrics here. So you can see some very impressive returns over the 1, 3, 6 month returns there, 1 year, 3 year. All right, this is what I'm interested in. I'm interested in what it's currently holding. Why is it that this portfolio is doing so well? Well, here they are: ACQ, EGG, NBI, TNK, and WAM. So what I've done here is I've created a watch list and populated those stocks. To show you what I mean, if I open this one up over here, I go to watch list viewer. Now to speed things up, I've created a watch list and populated those stocks already. All right, so I'll just make it stand out there. So all you do is you click on a given group. I recommend, say, my watch lists. So click on my watch lists and then drop down here and click on a new watch list. Okay, and then give it a name and then click add. I've already done it. So in this particular case here, I gave it the name SMSF Balanced, and then you add in your symbols. So here you'd add in TNK.AX, comma, next one, EGG.AX, comma, etc., etc., until you've got them all in, and then you click enter or add, and they'll all be added in to your given watch list here. All right, so that's how you do it. You populate them all in. What I want to do here is I want to concentrate on what the SMSF Balance portfolio is currently holding. Why is it that it's doing so well? Well, let me ask you this question. When looking for stocks, as we've taught over the years, the VectorVest simple technique works incredibly well. It's very, very hard to beat. It's a technique that I refer to all the time. If you can find a technique that beats it, let me know. VectorVest simple is a brilliant technique. All we're looking for, smooth left to right price patterns taking place with a rising set of earnings. And you might want to throw in 1 or 2 other parameters just to double check. Let me demonstrate. Let's come down to the bottom here, right click, view watch list average graph. So I'm going to load up the average graph. Now let me ask you this question. Since the start of the year, because we know that all of these stocks have been held since the start of the year. I'll show you why shortly. All right, so around about January, what have the earnings been doing since January? Well, here we are, that's December, and then we come into January, around about here, that's where January starts. Earnings sort of going sideways, and then all of a sudden, whoosh, up it goes. The earnings start cranking up, and they really start cranking up. There's one of the key drivers you're looking for, rising earnings across your given stocks. Yep, big tick. Rising earnings taking place. Let's have a look at the technicals, relative timing. Here we go. Let's make an area graph. Look at that. So technicals have been holding steadily above 1 since the start of the year. So the technicals are firing up. The fundamentals are firing up. It's undervalued. It was neither here nor there. I'm not concerned either way. If the price is dramatically overvalued compared to the value, then I get concerned. Give or take 10, 20, 30 odd %, I'm not overly concerned. It's when it's dramatically overvalued, that's when I become concerned. So you can see at the moment there's room to move. It's undervalued. Okay, so it's all stacking up. There it is. Let's throw in our CI indicator, comfort index. So capital appreciation, and it's there. It's housed CI, comfort index. Put it on. Right click. Let's make it an area graph. There we go. Look at that. The comfort index went from below 1 to above 1. The technicals holding above 1. The earnings start firing up. There you go. There's the secret behind why this portfolio is doing so well. Both fundamentals and technicals are working in its favor. In addition, the most important aspect, of course, market timing. So the market has been on a tear to the upside. If you can find good quality stocks where the earnings are rising, technicals are holding steady above 1, powering up, and where you're finding that smooth left to right price pattern developing. Here it was definitely taking place, but look at this, it was starting to turn around. The turnaround starting to take place. That's a very nice smooth left to right price pattern on those stocks. Technicals firing up, earnings firing up, and for extra measure here, look at that, the CI then breaks above 1. That is a great set of stocks in the current prevailing market conditions. And that's exactly what the SMSF balanced portfolio did. Okay, so if you come back to your trading system viewer up here, okay, there it is. It's doing it every day for you. Another place you can find it is per your portfolios tab, and then you can click on VectorVest portfolios, and then you can come in and find it. Here it is, SMSF balanced. Click on that, and there it all is. I'll just minimize this out, and you've got that at your fingertips each and every day. If you want to drill in a bit further to see exactly what has taken place over the years, the last thing I'll leave you with here is you can click on reports, and then you can view the transaction log. And in here, you can then come in and have a look as to what has taken place over the years. So you can look at exactly what's taken place, the transaction log. The one I prefer, you can then look at trade history. So trade history is another way to do it. This is my most preferred way to do it. So I can click on close, okay, and from here I can see this is what was closed out in recent times. So I can see, okay, only one position was closed out, Mortgage Choice, for a loss of 2.96% for 2021. It was acquired in 2020 and sold out just for a small loss in 2021. If I close out of here, I can then come in and have a look over here and see, okay, well, this was acquired in March of 2021 and the rest were acquired in 2020. So if we go back, let's remove EGG from our watch list. Remember that watch list that we'd just created. So come back to the watch list here. Here we go. I'll take out EGG because we weren't holding that as of the start of 2021. Let's have a look here. So all of these were being held as of the start of 2021, and look at that. So there we go. If I go back to the start of the year, here we go, going back just a wee bit over here to the start of the year, around about here, look at that. So technicals holding steady, earnings really start cranking up, and here your CI really starts to get going at around about that point there, the 10th of March. Let's do this out of interest for a bit of fun here. Let's go back to the 10th of March. Here we go, 10 March. So it was all lining up at that stage. We could see it on the graph. CI above 1, RT holding steady, EPS starting to go gangbusters. And let's quick test all of those stocks. So here we go, 10th of March. And look at that. So it looks to me like a lot of it's been driven by this one here. So the name there, Think Childcare up a whopping 30-odd%. WAM up 6%. ACQ holding steady. And MBI not really making much headway just yet. So there we go. We've drilled in a bit further. Think Childcare has been a heavy contributor to the success so far in recent weeks to the SMSF balanced portfolio. And thanks to the rule and money management sets there, I think Childcare was picked up. Okay, so there we go. SMSF balanced portfolio. See what you think. Can you improve the returns by changing the parameter sets if you were to go and back test it over the years? Until next week, have a great weekend, everybody. Bye for now.